Microsoft Corporation, ticker MSFT, and International Business Machines Corporation, ticker IBM, two of the world's biggest tech companies, have continued to prove their worth and resilience during market volatility amid the coronavirus pandemic. As organizations' affinity for cloud-based platforms is on the rise, these companies are expected to grow steadily in the upcoming months. Microsoft gained 38.6% over the past year, while IBM declined 8% over this period. In terms of past 6-month performance, Microsoft is the clear winner with 14.1% gains versus IBM's 1.3% returns. But which of these stocks is a better pick now? Let's find out. Latest movements. On December 10th, Microsoft and Deutsche Telekom Group announced a 7-year strategic partnership to help enterprise and customers accelerate digitalization and enhance productivity. This will enable Microsoft to accelerate innovation and deliver high-quality services based on customer demands. The company has recently collaborated with Johnson Controls to digitally transform how buildings and spaces are conceived, built, and managed. Microsoft also announced the availability of Microsoft Azure Digital Twins to support the entire ecosystem of building and device management technologies. This will allow Microsoft to better meet the evolving needs of its customers. On December 11th, IBM announced a collaboration with Amazon to use its web services platform to help clients simplify and extend their security visibility. This will help IBM provide a more seamless client experience and drive greater return over the long run. The company has recently launched new innovative capabilities for IBM Watson designed to help scale the use of AI by businesses. This will help IBM advance in its AI business strategy and enhance its customer service. Recent financial results. In the fiscal first quarter ended September 2020, Microsoft's revenue surged 12% year-over-year to $37.20 billion, primarily due to a rise in intelligent cloud services revenue. The company's EPS grew 31.9% year-over-year to $1.82. Microsoft's Office commercial products and cloud services revenue increased 9% driven by Office 365 commercial revenue growth. The company's operating income rose 25% from the year-ago value to $15.90 billion. Moreover, it saw a 30% rise in its Xbox content and services. IBM's cloud and cognitive software revenue grew 7% year-over-year to $5.60 billion in the third quarter ended in September 2020. The company's cloud revenue grew 9% year-over-year. IBM's EPS rose slightly from the year-ago value to $1.89 over this period. Thus, Microsoft is in an advantageous position here. Past and expected financial performance. Microsoft's total assets grew at 6.5% over the past 3 years. The company's leveraged free cash flow grew at 34.4% over this period. Analysts expect the company's revenue to increase by 11.1% next year. Microsoft's EPS is expected to grow 10.5% next year. On the other hand, IBM's total assets grew at 8.2% over the past 3 years. The company's leveraged free cash flow has been 26.3%. Analysts expect the company's revenue to increase by 1.2% next year. IBM's EPS is expected to grow 38.2% the next year. Profitability. Microsoft's trailing 12-month revenue is 1.96 times of what IBM generates. Microsoft is also more profitable with a gross profit margin of 68.3% versus IBM's 48.2%. Moreover, Microsoft's ROE and ROA of 41.4% and 12.1% compare favorably with IBM's 40.1% and 3.7%, respectively. Valuation. In terms of forward P/E, Microsoft is currently trading at 31.75 by, 55% more expensive than IBM, which is currently trading at 20.49x. Though Microsoft is less expensive in terms of forward PEG, 2.67 versus 7.79, its trailing 12-month price, sales of 11.06 is much higher than IBM's 1.46. In terms of trailing 12-month price, cash flow as well, Microsoft's 24.47x is 251.1% higher than IBM's 6.97x. Though Microsoft looks much more expensive compared to IBM, this premium valuation is justified considering its higher earnings growth potential. The winner. Both Microsoft and IBM are good investment bets considering their market dominance and continued expansion. However, Microsoft appears to be a better buy despite trading at a higher valuation based on its higher revenue and earnings growth potential.